Well, good morning. It is Friday, not Wednesday. It is 11 a.m. on the Pacific Coast. Good morning to you on the Pacific Coast and for our friends in Hawaii and back that way, and good afternoon for the rest of you. Welcome. I'm actually kind of considering Fridays as an alternative to Wednesdays. I find myself overwhelmed on Wednesdays, and Fridays are more chill. And people seem to have more free time. They're kind of ready to, just relax and get to the weekend. And it might be a cool time to just kick back, get some CPE credit and learn. I'll do a little survey. So we're back with part 2 of an event that we did some time ago before tax season. And then it was, whoa, there's way more to this, right? I remember when Brianna and I were talking, she's like, I'm concerned I don't have enough content. I'm like, oh, trust me, you will. And there was so much. And then people were asking great questions, and it led to a part 2. And here we are with part 2, and it was just awesome. Wow, everybody's showing up now. They know that I jabber in the beginning, so they show up a few minutes later. Some of these people know that I'm quite talkative. So we are going to do part 2 because Brianna is also talkative, and she is going to continue her talk from before. And we will talk about that in a moment. I'm Eric Greenspan. I'm very excited to be in the holiday parade tonight with the Santa Barbara Monarchs girls hockey and the Santa Barbara Ice Hawks. I'm a hockey dad. We are going to be on rollerblades and full dress gear. I'm going to be in a coach's uniform, handing out candy canes in the holiday parade. Our Monarchs and our Ice Hawks are excited. It's going to be a fun night. I'm also the CEO of 74 Systems School of Bookkeeping, and we run a little thing called the Ignite program. So by now, you've probably heard about this funny little thing called OMS. Just real quick, just to let you know, OMS is a new system that we're offering to allow you to sell QuickBooks products, payroll, and payments directly on your website, both for IRPs and for ProAdvisors. So you can sell products on any website if you're an IRP. You can manage the orders better and updates to various products and things. You have automated pricing updates. We handle that for you. Lead and client management can be automated, and they can be embedded on your sites and your partners. And the pricing ranges from $245 a month on up. It's very, very good value. It will change the game for the Intuit resellers that use it. The ones that have already done it have just had tremendous success. But then there's also this cool thing for ProAdvisors. Imagine if you could just stick something on your website, and I know a few of you here that were already doing it, and I see somebody who's going to ask me about it later, I'm sure. You can sell any QuickBooks product, payroll or payments. You get paid a commission from Complete Business Group, who is a partner of ours. You'll get premium support referrals from both them and from School of Bookkeeping, and there's no commitment. You can also join Carrie's program, and that's a different piece. It's the same concept. This one is a lower weight, less commitment version of it. And the really cool part about it, the cost is it is included with School of Bookkeeping membership. So if you're a School of Bookkeeping member, we will put OMS for ProAdvisors onto your websites so that you can start selling QuickBooks while you sleep. Pretty cool, huh? And get paid. Learn more at schoolofbookkeeping.com/OMS. Ironically, I created OMS. Brianna, you'll appreciate this. I created it as a different product for a different company with a different acronym. Back in 2000, it was called Opportunity Management System back then, not related in any way, shape, or form, but I just thought it was cool to carry on the tradition, and that was built for KPMG. Can't get away from these accounting people. Today's guest host, ladies and gentlemen, is Brianna Beers, and she is now our Tuesday ABO host. She's a character. She has great personality. She's really, really smart. And she spent a ton of money and took a huge risk and bought this firm and is running the heck out of it. She bought Lipa Associates, and it's now Lipa Beers and Associates, and it's really, really, really cool to see. She got through her first tax season. She's still breathing, and she's doing great. Now, before I introduce her and let her take over, I just want to mention one other really cool thing that she's doing. Some of you are going to say, I want to do that too. And others are going to say, I'm in. So Lipa Beers and Associates is a tax preparation and consulting firm, advisory. not really into the whole bookkeeping thing. So Brianna's decided that she wants to work with bookkeepers and she wants to build a partner program. So we have created the Beers and Books Partner Program. She gets a lot of beers jokes in her life, I'm sure. This one is probably paramount. There may be some beer drinking. She lives in Colorado, so who knows what else might go on. Jay, that was for you, buddy. Zero con. So at the end of the day, Beers and Books is a program that's going to basically enable her partners to get support from her. Yes, a channel like you have with Carrie or like with us, either in Slack or on Facebook, where you can ask any question you want of her whenever you get involved with a situation where you need tax advice. She's going to be your go-to person and will respond in a friendly manner. And then you're going to cross-refer. You're going to refer each other business. You send her tax clients, she's going to send you bookkeeping clients. Pretty cool deal. And if she does get a client from you, she is also capable of paying you referral fees. So we're going to talk a lot more about this. This is just getting started. This logo is temporary. We had a little fun. Anybody have any questions about that? You can reach out to Brianna. Just go to lipabeerscpa.com, or you know how to get a hold of me. All right. So I ask you, are you achieving all of your goals? No, we never do. But you have to set something each day and achieve it. Otherwise, you're going to feel the doldrums of life. You need to be doing something that is driving you and moving you forward. You know, my fiance, Angela, is studying for finals for her second year in law school, and it's awful. It's brutal. She's fighting it. But at the end of the day, I can tell that she sees the light at the end of the tunnel, and she gets through another book, or she gets through an exam or another class, and it's just these little steps day after day, and it gets her through, and she sets these goals and she achieves them. And I know because she uses Insightly to track them. It's pretty cool. Do you have enough good clients? You're looking at one of mine. She's a great client. I enjoy working with her. When she requests something of me, she does it in a way where it's just, I'm willing to help. I want to help. She pays when she's supposed to. I mean, these are things that you need. You've got to have good clients, folks. You have to enjoy being able to come to work each day, and you have to charge them enough. Okay, we'll talk about that later, Brianna. But you have to charge them enough money, because if you're not making enough money, then you're not going to want to be there. And if you're not going to want to be there, then it's not a good fit. It's got to work both ways. And are you having fun? I mean, can you work with your client and name their partner program something about beers in Colorado? I mean, come on. I'm talking about the Golden State, right? Coors. Do you do what you love? Clearly, if you know me, you know that I do. I hope that you do too. Please be sure that you do. Before we get started, real quick event primer. Please use Q&A for questions that require a response. If you want to just heckle Jay Kimmelman or myself, or just have some fun chatting openly, use the chat feature, but use Q&A if you have a real question that you want a response. Please vote in the polls. It is required for CPE, and I'm going to ask you, oh, I know why you guys are here. It's the end of the year, and you need CPE credit. Oh, I love that we did. Oh, I love that CPE thing on the wall. All right, Brianna, you get double, by the way. Jay, do you want to host something next week? Yeah, watch Jay say, uh-huh. Why do you think I'm here, right? Okay, let's start our first poll. And it is, are you attending today for CPE credit? You got to answer these real quick. And then if you are, we will issue it automatically to paid subscribers, faculty, and friends. If you're in a trial, we will send it to you. We normally don't send it to our free members, but reach out to us and we might be giving it as the holiday season, and we know it's tough for you. If you all vote and you have, then we will continue. Ladies and gentlemen, we are going to get started. Brianna Beers from Lipa Beers and Associates, now the home of the Beers and Books Partner Program. It's your show.
Awesome. Thanks, Eric. So I want to say thanks to everyone for joining me. I don't know how many of you were here for part one, but there was a lot of good content there too. So definitely check that out at School of Bookkeeping Archives if you want to look through that. I will reference it a few times throughout this, so if there's something that piques your interest, I'd start there. So quick agenda. So I'm going to briefly review the differences between legal and tax structure and do a top level review of just some of the tax differences. Hold on. All right, that poll was still sitting on my screen, sorry.
You won't be able to.
Then we're going to go into the meat of the presentation and get into some of the details we didn't get a chance to in part one. So from there, we'll do talk about owners' compensation. How do the owners get paid through each of these entities? We'll talk about the treatment of different expenses and how it differs from structure to structure. And then finally, I'll share some thoughts on how I'd set up a chart of accounts in a way that helps you as a tax preparer, or helps your tax preparer, while keeping it in the flow that you as a bookkeeper or the business owner like to see. So
ironically, before you continue, I'll let you know that less than 50% are here for CPE, which means they're actually here to hear you.
All right, well then
Cool.
that's really exciting.
And I'm pretty sure the two that I know that are here, I see Mr. Tom Jones, who's a client of ours as well, and Jay Kimmelman, who's also faculty. Tom will soon be faculty. They are both CPAs, and I'm sure they're both here for their CPE credit, but I know they're both interested in hearing what you have to say. Gentlemen, please chime in if you'd like to add something, because
yes, that would be
hear
awesome
from you.
Thank you. And definitely give me feedback when we're done, let me know. So that's great.
Unless it's bad, then don't tell her.
Oh, well, no, that's constructive, Eric.
All right, let's go.
Constructive criticism. That's how you learn. So first we start, there's legal structures. And the legal structure of a business pertains to how the business is set up, registered, and recognized by the state or the governing boards. So you see here, there's SMLLC, LLCs. So those don't necessarily indicate the tax structure, and there can actually be overlap. So on the next screen, you'll see, or the next slide, you'll see that tax structures, there's 4 basic entity types. And there's the sole proprietorship, SMLLC. You'll also hear that called, Schedule C business.
What does SMLLC stand for?
Single member.
Oh, single member.
Yeah.
So disregarded entity.
Yep, same thing. So I kind of use those interchangeably, all the same for tax purposes. That's oh, thanks, Jay. Thanks for loving my energy. I try.
No, he's talking to me.
No, he's not. So there's a partnership, then there's SCorps, and then there's CCorps. So in part one, we learned the tax benefits of each of these entities. So again, if that interests you, go back to part one and check that out. So before we jump into everything, Eric's going to launch your second polling question.
Man, you're demanding. Can I get the last person who just joined to please answer that poll question so that I can move ahead? I need to get full response from everybody. It's real easy. Just yes or no. Are you here for CPE credit? One more person, please. 9, 8, 7, 6, 5, 4. Come on, vote please, vote please. All right.
Probably Jay.
All right, the next one is now launched. The legal structure and the tax structure of a business are always the same. True or false? Let's see. Oh. Yeah, you didn't fool them. Yeah, 100%. Everybody said false. Good.
Awesome.
Okay.
All right. So owner's compensation. So what that is how does the owner get paid for the work he or she does for the company? So we'll start with the sole proprietor. So with sole proprietors, they're not allowed to pay themselves a salary. So what they do is they just withdraw the money for their personal use as they need it. So they're taxable. There's a difference again. So with taxable, their taxable income is just their income minus their expenses. That's what they're going to get taxed on. But they can pull cash out of the business as they need. And then those withdrawals are not, there's no taxable effect with those withdrawals. So for partnerships, similar to a sole proprietorship, partners are not allowed to receive a salary to compensate
what do you mean
for their
by
work.
salary? You mean like where there's deductions?
W-2 wages.
But they can still take a check. It's just a withdrawal.
Well, yeah. Can I continue, Mr.?
Well, no, I'm going to stop you right here because
Why?
I don't see me up here. Well, although I am an SCorp from a filing status, we're an LLC, and we didn't take a salary last year.
Did you say you're an LLC as an SCorp?
Yeah, but we didn't take a salary in year 2. We're in big trouble, huh?
No, maybe not. Depends on your tax situation. That's a whole nother webinar.
But that's the only reason I'm here. I need to know the answer. I'll call Jay. All right, go ahead.
So with a partnership, the partners get the money out of their partnership either through guaranteed payments, distributions, or a combination of the two. So the guaranteed payments are typically outlined in the partnership agreement, and they're meant to act as the compensation tool for the work the partner's doing for the partnership. Not always the case, but that's how it's supposed to work. So the guaranteed payments are going to be treated as taxable income to the partner, and they're going to be subject to self-employment tax, whereas distributions are kind of like the withdrawals from the sole proprietor, and they're not a taxable event. There are exceptions to that, but we're not going to talk about those today.
So again, this is all off the W-2 block. We're not there yet.
So yeah, so partners in a partnerships do not take a W-2 salary.
So do you make less money when you file returns for these first two because they don't have as much stuff to file, or?
Say that one more time.
So a sole proprietor just files a 1040, right?
Yeah, so their business is all on Schedule C of their 1040.
So you're going to make less money off of a sole proprietor?
It depends on how their books look.
Okay, gotcha.
But typically, yeah, it's because it's not a whole nother return. It's just a piece of the 1040.
Okay.
So with partnerships, it's important to remember that distributions don't equate to taxable income. Because I can't tell you, I have so many clients that will come to me and they'll say, how can I have $100,000 in taxable income in my partnership when I didn't take any money out? It's like, well, you don't have to take money out for that profit to be taxable. On the other side, we've had clients who think their distributions are an expense. So that's always a good one. So they ask how they have any taxable income when they took all the cash out throughout the year. So it's really important, and it's really helpful that your client understand which, guaranteed payments, which things are taxable and which are non-taxable events. So.
CCorp.
Yep. Nope. SCorp.
We just did that.
No, that was partnership. So with an SCorp, so shareholders of an SCorp have to take a reasonable salary. This is, I think I threatened you, Eric, last time with doing a webinar on reasonable salary, and that probably might not be a bad idea still. So
meaning don't make the same mistake this year and take a salary today?
Well, there's no cut and dry on a reasonable salary. It doesn't say real estate agents should take $50,000.
As long as there's something that creates a W-2, right? I mean, in essence, you have to pay some sort of taxes.
Yes, they want, because you're not paying partnerships pay a self-employment tax. You're not paying self-employment tax on your S-Corp income. So they want their FICA, so they get that through a W-2 for the shareholder.
Okay.
So that's why you need to do that.
Yep.
So this salary is a deduction to the S-Corp, and then it'll be reported on the W-2 for the shareholder on their personal return. And then shareholders can take out distributions after their reasonable salary is satisfied if they want to take out more cash out of the business. And just like a partnership, typically distributions are not taxed unless they're called an excess distribution. And again, that's why you have a tax.
What are taxes pass through income to the individual, right?
What?
So they're taxed at the individual level rather than at the corporate level.
What is?
The distributions.
Yes.
Right. Because the way we run our company is we just buy things and we put it to owner's draw, owner's draw, owner's draw. So those are our distributions. The part we miss is the salary piece.
Yeah.
It seems so silly to have to take a salary.
Well,
do you have to? I mean, can you stay? It's better for tax purposes.
Jay, you gonna get on for this?
She's gonna put the onus on you. I'll ask him. Do you want him to? He's not on a device.
He said yes.
We'll talk to him later.
So the fourth one, we go back to CCorp, and again, the shareholders again have to take a reasonable salary, and again, salary is treated as taxable W-2 wages to the shareholder, deductible by the company. Corporations can also pay out dividends to the shareholders. So, but these dividends, kind of like distributions, except they are taxable. They're reportable and taxable at the taxpayer level as income. So, which is why where in S-Corps you tend to see low salaries unreasonably low salaries or no salaries, Eric. And in C Corp, sometimes you see unreasonably high salaries because they don't want to take, they want to take their money as income, as a W-2, as opposed to paying that, they call double taxation on the dividends.
I've been accused of both. So where does the LLC fit in? Does it have to go into one of these boxes because it doesn't have its own tax status?
Yeah, so the LLC is a legal structure, and it's going to fall automatically, it's going to fall into either the sole proprietorship or the partnership. And then unless you elect SCorp status or you file as a corporation. So
you would do the SCorp election because it's beneficial to you because of the tax consequences.
Yeah, for now. We'll see.
I mean, that's ultimately
tax legislation. We'll see.
So here's one for you too. We were, let's see, back in, I don't know what it was, back in 99 or 2000, I sold my company. I was hired as a CEO and I was put on W-2 and I was paid, you know, a sizable salary. But then to buy my company, I was paid a monthly guaranteed payment instead of the millions of dollars up front. Wish I would have taken the millions up front. What were they doing? What was, I mean, it was totally legit because we got audited by PwC because we, you know, got funded by KPMG. So it was all legit. What do you think they were doing? What was the tax structure? So I think we were an LLC in the beginning. So it was a little more flexible. So it was behaving like a partnership.
Well, then the guaranteed payments were just part of your partnership agreement.
But then when it became a C Corp, I was still getting those payments.
That might have just been something with the, I mean, that might have been something totally separate than your compensation. It might have been something that, you know
what we did? We had to create a C Corp and then buy the LLC into it. So it assumed.
It might have had something to do with the purchase, not with your compensation.
Yeah.
So this is all just compensation.
Got it. Okay. Thank you.
Oh.
So we have a poll question. I don't think I have a clue. Did I mess this one up? Did I do it right?
Pops up underneath, which is, yeah.
Okay.
Are they all numbered number 1?
Yeah, the way Zoom does their questions, you have to fake that, and I never seem to. You're supposed to create one poll with a series of questions, but I find it much easier to do it this way. So I create a different poll for each question. I've talked to the owner about it. So everybody is saying, I'm not going to answer, I'm not going to say it yet because we still have some voters out there. And I know that some people try to wait for me to give out the answer. And then all of a sudden I see it fill up. Come on, everybody respond. It's okay if you get it wrong.
You still get your CPE.
You still get your CPE. Well, you don't get your CPE if you don't answer. Let's put it
right. But if you answer wrong, you still get it.
That's right. Absolutely. Plus we learned something. Okay, I need one more. Come on, one more. One more. Come on, Jay. You know the answer. I don't know who it is that has an answer. We don't know who you are. It's all anonymous. All right, go ahead, talk about it.
We'll just call Jay out every time.
Yep. So the answer is, I'm assuming C Corp.
Yeah.
Mm-hmm. That's where most of them are. Raise your hand if you didn't answer C Corp. I'm kidding. See if anybody's brave. I'd admit it. All right, so now we're talking about expenses.
So when it comes to the majority of the expenses for a business, they're reported the same across the board. You know, we're talking, you know, your rent, your, you know, those normal things. But there are certain expenses that are reported differently depending on your tax entity type. So starting with the sole proprietor. So here, your owner's health insurance and your long-term healthcare premiums, long-term care premiums, they're separately reported on the Schedule C. And that's these two items, they're subject to certain qualifications and subject to limitations. So that's why they're broken out separately on the tax return. And they're reported as adjustments on the 1040 as opposed to within the Schedule C. So that is why that's their tax difference. And then also charitable contributions. You're allowed to make charitable contributions out of your sole proprietorship, but they're not gonna be reported on Schedule C. They're still gonna flow through to Schedule A as an itemized deduction.
You know, I gave a lot of tips in Cabo. Is that considered charitable contributions?
Oh, were they qualified 503?
Yeah.
Yeah, didn't think so. Good try though.
So you have to actually have that 501(c) status to consider. I mean, it has to be legalized in that way, which is why GoFundMe is so awesome. We
Yeah.
raise money for our schools and for the monarchs. And you get
Definitely.
a little statement. Interesting.
So then we go on to partnerships, same items. So here the owner's health insurance is reported separately. Here it's, again, because of limitations, because there it is. So self-employed health insurance is limited to the taxpayer's income. So if you have no taxable income on your 1040, then you aren't going to get to deduct the health insurance premiums you paid for that year. To build on that, let's say you had $10,000 in income and you had $15,000 in premiums, your health insurance deduction is going to be limited.
You're going to be hanging out at a bar all day long too.
Yeah.
I mean, the sad part, although it's true, is health insurance is going up again right now because of the change in our political structure. And here in California, Anthem Blue Cross pulled out of our area. So we no longer have it. So we have Blue Shield. And by the way, if you are in Santa Barbara, Angela, you're going to be very happy to hear this. I forgot to tell everybody, Blue Shield has signed a contract with our local clinic finally. So I'm actually going to be able to keep my kids safe. I was scared. This is crazy. But the point is that health insurance, you've got to be making some pretty decent money to afford it in the first place.
Yeah.
Whew.
Which is, I mean, that's part of the reason I think they're going up, because this new tax legislation may get rid of the individual mandate. And so the insurance companies are kind of preparing for that, so I don't know anyone that's on the individual. I know mine are going up by like 25%.
You have a business plan?
Now I will. We switched over, but if we weren't, they would have been skyrocketing. So, bummer. So back to, partnership. Oh, charitable contributions, similar to sole proprietor. They are reported on the K-1 in a separate section so that they flow through to Schedule A and are reported as an itemized deduction. So the SCorps, same two items we see again, owner's health insurance and charitable contributions. Owner's contribution a little different this time. This time the limitation is it's limited to your W-2 income from the SCorp. So in theory,
sorry, say that whole thing again. What part is?
Premiums paid are
for
deductible.
health insurance.
For health insurance are deductible, but they're limited to the shareholders' Medicare wages that are on W-2 from the SCorp. So in theory, if your shareholder is receiving his or her reasonable salary, then that should be more than they're paying in premiums, so it shouldn't be a problem. But when they don't take that reasonable salary, they're going to come into issues, and we've had a few clients that, refuse to take a reasonable salary and then get mad when their insurance premiums aren't deductible, and we have that fight.
Oops.
So with SCorps, though, another new item that we see is owner's salary. So there's no difference in how it's deducted by the SCorp as an expense, but it is separately reported on the SCorp's 1120S, and the owner's compensation requires a totally another form, the 1125E. So that's why it's considered a separately reported item on an SCorp, because even though it doesn't change the income per se, it has different reporting requirements for the IRS.
So we have a hand up, and I didn't ask for anybody to raise a hand. I think maybe somebody wants to ask a question. If you want to ask a question, folks, just type it into Q&A, and we will respond to it.
Sweet.
Maybe it's just testing out the hand feature.
So then we get to C-Corps. So C-Corps are completely different. They are their own tax-paying entity. They don't flow through like the other entities do. They are their own tax-paying entity, so they calculate and pay the tax directly on their Form 1120, as opposed to flowing through, like I said. So we don't have the pass-through items that we did with the above entities, but we do still see that officers' compensation, and I missed that on the slide, the officers' compensation is separately reported on the 1120 because the 1125E, that extra form, is still required. And then in a C-Corp, there may be dividends paid out, like we talked about before, and those dividends are not deductible to the C-Corp. So those are your differences for your C-Corp reporting.
Can you see the question?
Oh, yes.
Don't say the name.
Nope.
So the question is, in an S-Corp, are medical expenses other than premiums deductible, or are they reported on 1040?
So the basic answer is no. But there are ways you can get with your tax planning and your tax planner to make plans, like cafeteria plans and reimbursement plans that will help you. Jay also makes a good point that health insurance is also it's reported on the W-2. So as income, sorry, that's just kind of a side note. But so S-Corp medical expenses other than premiums deductible. No, they're on Schedule A unless you set up a qualifying plan.
Okay, I've got one for you.
Okay.
And anybody can chime in, because I don't know if I might have asked you. I think I asked Tom. So I finally paid off some child support that I had in arrears when I had an issue with a business years ago, and I had a $97,000 child support arrears due, and I paid it off over this year. It's gone. 24,000 of it was interest. It is my understanding, of course, child support is not deductible. Right. It's my understanding that the interest paid is, at least in my state. Jay, Tom, anyone else? What do you think? I'm pretty sure I read it on NOLO from a tax attorney.
From a what?
A tax attorney.
Oh. Is your interest on child support?
On child support arrears, not the child support itself, but
right.
The interest paid to the government. The interest paid to the mother.
Right. I know what you're saying, but I have never encountered that. So we have kids who clients who pay child support.
Yeah. I'm pretty sure it is. So look, Jay's probably Googling it right now. He's trying to get an answer.
I hope so. I'm interested to know.
There it is. Right. I do not think so, at least federally.
That's what I was wondering, if there was a state mandate or something with the state.
There may be, because it's a California state that you're paying. And then
they tax you for everything. Maybe they'll let you deduct everything.
It's interesting. Okay, we done on this page?
You can go to the next polling question if you want.
Polling question. Everybody done with the poll? Last chance? Okay, here we go.
Polling questions are good chances for people to ask questions too in the chat box or in the Q&A.
We've got one question answered. Anybody else have a question? Just pop it into Q&A. Okay, so the new poll is: owner's health insurance is separately reported tax item for which entity structures? Can you hear the Jeopardy theme in your head?
Yeah. And I'm just thinking about how anytime there's all of the above, I always choose it even if it's wrong.
Right. Particularly on a webinar, because,
Yeah.
it's not like you're trying to flunk somebody. You want them to get the answer right. So there are no wrong answers, folks. There's a hint. But there is one best answer. And no, you can't fix your response. I don't think you can.
I think it's no.
Jay made a comment earlier about how, and that's just to us, so they didn't see it, about how this new health insurance is crippling small business. And,
yeah.
And if I don't say his name out loud, Puppy Monkey Baby, doesn't fix something related to the tax aspect of it, it's going to be even worse. Because I mean, I can't even believe what I'm paying. And it's weird too, because I'm like less than my kids. Well, I don't go to the doctor, they do, but I have to pay when I take them. I don't know, it's crazy. Everybody answer? A couple of you are sleeping. I see one of your employees on. I think she's answering.
I don't think mine are on. I don't see them.
The tax bill will kill us all. Will
not. Oh, don't give me stuff. So I took a
we can't debate. It's not designed for us. That's not designed for working people.
No. And I took a CP last week, and 2 of the hours was just all about the tax proposals. Yeah. And it just, I think my blood pressure went up like ridiculously the
I
entire
mean, folks,
time.
raise your hands if you're concerned about our world right now, our financial aspects, the world in general, just, you know, the sanctity, the safety. But now raise your hands if you've, let me ask a different question. Raise your hands if you've ever felt that way over the course of your life. I mean, there's always been something, you know, I mean, the Cold War's over with Russia. When I paid off that debt and then closed escrow on my house last week, it's kind of like, now what do I have to worry about? All of a sudden I was like, oh, I feel great. But I remember asking a friend of mine who sold a lot of stock in a company and made a lot of money. I said, what's worse? Worrying about building it or worrying about holding on to the cash after you have it? And I think in a lot of, it's once you lose that stress of what it was before, and you start dealing with the new thing that's your new focus. Okay, so I'm not worried about paying that bill anymore, but now I have to focus on these things, which I haven't been focusing on because I've been so stressed about that, right? So it just transfers from one to the next. So you've got to make the best of it. And that's why I go back to saying you have to do what you love, because at the end of the day, you just kind of have to laugh at this whole thing. You know, I tell my kids that we have left them a mess and they better fix it for this, you know, for their own benefit. I hope they do.
Yeah.
They'll code it. They'll code the solution.
No.
Okay, we'll leave that poll open for a little bit. Let's talk a little bit about the chart of accounts. And we're going to break these down by each entity.
No. And I'll explain why in just a minute. So with the chart of accounts, so we've identified these items above that are treated differently or reported differently or separately on the tax return. So big whoop-de-doo, there's lots of items like that, right? I mean, we have the book to tax differences, you know, non-deductible fines, book tax depreciation differences, non-deductible officer life insurance. So there's always these book tax differences in when you're looking at the profit and loss statement. And since the beginning of time, I swear, like bookkeepers and CPAs have butted heads when it comes to how we want them recorded. Because taxpayers want to, or tax preparers want to see them, you know, owners and bookkeepers, you know, the bookkeepers want the books to look the way the business owner wants them to look, which is the bottom line, you know, how much money did I spend? So I've had the privilege of being, what?
So you're saying the bookkeeper subscribes to the philosophy of more in the chart of accounts, so you get more granular data?
Not necessarily, but I mean, they don't want, you know, they want to see, and I came from a bookkeeping background long before I got into taxes. So I've been on both ends of this.
And you have an opinion about the chart of accounts.
We're talking about the chart of accounts, which leads into the P&L.
Yeah.
And there was nothing more frustrating than when you worked on your books and then you got it back from the tax accountant and they had made all these changes because they needed them for the tax, you know, return, but that's not the way.
You mean like they merged categories and stuff? And
the biggest one, the most common one I've had lately is the book to tax depreciation difference. You know, that's a difference in numbers, and the tax difference should be something only your accountant sees. It shouldn't be something that sits on your books, because if your book accounting, like if that is your method of accounting, then that's what you want your P&L to reflect. So setting up this chart of accounts, okay. So back to.
He is absolutely in full. I think he agrees with everything you say. You guys need to.
I love him. I became friends with him on Facebook.
Just be careful though. You're trying to move away from zero, and he'll make sure you stay.
Oh, don't tell him that. Jay, he doesn't mean it. He doesn't mean it.
Jay's here for CPE and to promote zero. We know, it's okay. We love him for that. We love zero.
So bookkeepers, business owners, they don't care about those non-deductible expenses. They want to see what they spent, what business expenses they have, and they want them on the P&L.
Yeah.
And tax preparers, like for me, as far as I'm concerned, as long as I can dig these out easily, they can be wherever they want to be, wherever they need to be. So our firm in the past has worked with a handful of outside bookkeepers, and over the years, and we've worked hand in hand with them to try to kind of come up with a standard chart of accounts, if you will, that helps keep the P&L and all these items the way the business owner wants it, but easier for tax preparation once that time comes around. So the first method, and this is the one I have used, and that, like, if my client, this is the great one, is just to use, it's simple, that it's ridiculous, but it's just to use the other income and expenses section of the P&L to record these items. So, you know, the owner's salary or the you know, owner's health insurance will be at the bottom. So you'll have your income, you'll have all your normal operating expenses. So you have your net operating income, which is what, you know, you care about, but then you have all these other items that the tax accountant cares about. So they're all lumped together, makes it nice, pretty, happy, great to find.
So you're telling a bookkeeper that's going to partner with Beers and Books that that's what you want.
That's
one. Like to see it.
That's one method. And another one, so that one, I mean, it's universal across the 4 tax structures. If for some reason you convert, you know, your business from a sole proprietorship to a SCorp, it doesn't involve entirely changing your chart of accounts. It's a matter of maybe moving things or whatnot. So really easy. So it's universal across the 4 structures. It doesn't have a negative effect on any one tax structure over another. Like I said, it's pretty universal, fluid. Owner's happy because, again, they want to just see the bottom line. And so far, the bookkeepers, the other tax preparers that we've talked about are happy with this one. Another one I like, and I've seen it more, and I'm good with this one too, is to have a sub-account for expenses. So where you have health insurance, you just have a sub-expense account of owner health insurance. Where you have you have salary or wages, you have a sub-account of owner salary and wages. So this doesn't necessarily lump them all together for your accountant, but it makes it really, really, really easy for us to pull those items out. And what come tax prep time, just, you know, prepare that tax return really easily instead of back and forth asking for various reports or confirmations with the bookkeeper, because that back and forth can get, you know, time. It can kill on your time. That's where I'm going with that. It's great to not have to drill down and research where these extraordinary items are. To just somehow have them labeled in your chart of accounts that flows through to your P&L is fantastic. Another important note in relation to the chart of accounts is when you have your SCorps and your partnerships, it's fantastic and I think vital to keep separate equity accounts for each partner or shareholder. We get so many books that have one just lump equity account. And when it comes down to tax prep time, we need to know how much equity each partner or shareholder has in the business. So having those breakdown subcategories, again, equity, you just have Eric's equity, you know, Brianna's equity, breaking down their proportions makes it so much easier come tax time to make sure we have everything where it needs to be. And then one more thing on the chart of accounts, I know for a fact, or I'm pretty confident, that all of us have those clients who use their business account for personal expenses that they think are business related.
Wait, there's a personal account?
What? For their personal expenses,
Wait, there's a personal account?
What?
No, I don't even have a personal account.
Really? Oh my God. You sound like my husband. You know how hard it is.
So I told you earlier about the situation. Because of that situation, personal accounts are not protected from that particular situation. So I was forced to use LLC accounts to protect my assets. Otherwise, they would have gotten crazy. So
back to me. Just kidding.
No, not back to you, back to us.
Just kidding. So, and the biggest thing I see is state or it's tax payments. So, you know, your client thinks that their quarterly tax payments are a business expense because it's their business that is creating the income. But on those S-corps and partnerships, that's really their personal tax liability. So, I mean, more than, and it's not
considered a distribution then. It's a draw to them.
Well, so yeah, so it is. So, but what makes it easy, because like I said, so many things go through the business banking accounts, is what we've just started doing with a lot of our clients is creating sub accounts under the equity. So you'll see, you know, you have your equity account called shareholder distribution, owner distribution, partner draw, whatever it is. Under there, we create sub accounts such as federal quarterly tax payment or state tax payment, which makes it, once you do the personal tax prep, those things don't get lost in or buried in the equity account, in the distribution account. So they're nicely outlaid there, so they're harder to miss. So that's what I have. That's it. Eric has another polling question.
No, I think we have one. Is this my polling question or yours?
I think it's mine.
Let's see. It is. You overachieved.
Oh my gosh, sorry.
Big surprise. One last polling question for you, and then I've got some cool things to share. Go ahead and answer that, and I'll talk. Well, I'll give you a second to focus. Reminder, if you have any questions, pop them into Q&A.
Yes, please.
I got to tell you, the whole, I mean, we do it because we had to do it. It's over. Next year, we're going to run like a C-Corp. In fact, we might just become a C-Corp just because it makes it easy. You know, you just take a salary. But it's hard, you know, the reason why they do the SCorp thing and why companies don't become a C-Corp is because reasonable salary is based on fluctuating revenues, where C-Corps more often than not, you know, have established patterns. And, you know, if you don't make salary, you lose employees.
Yeah.
I mean, I've been in a situation where I've not paid myself to make sure that payroll would go through. And that's not fun. So there's lots of things you have to do in managing a business, and you have to make sure there's enough flow. I think at the end of the day, the gist of it is this. You got to be making enough money and profit to justify it. And if you're not, then raise your prices or find something else to do.
Yeah.
Okay, as we're going on, my dog is he's getting older and he makes these crazy noises. So if you hear anything, that's him.
So, and for you, you said you're thinking about going C-Corp. Keep your eye on the tax legislation because that's a big part of it. And
I know.
The way
I'm sure Jay's I'm saying that so Jay hears it because he's gonna give me an earful later. Everything I'm saying right now is that my accountant's on with us. So I'm sharing things and he's going, man, I'm gonna kick his, you know, and later he's gonna be like, okay, we need to talk. And he already did, you know, he said we need to talk, but that's for you because today is zero in. This is
I know, I saw that.
All right, so next up on our WOWbinars, the new name for our...
I love that, by the way.
It's pretty cool. Well, we had WEBinars. They were fun. And then we're like, well, we need something better than webinars for the other ones. It's like WEBinars and WOWbinars. WEBinars are recorded little things, and WOWbinars are these types of things with CPE. That's the difference. So we're going to do, Alexa, take off Do Not Disturb. Thank you. Alexa, play Do They Know It's Christmas by Band-Aid on Eric's Spotify.
Did you see the comment? Is Jay billing you for this hour? Is he
billing for this hour? No, in this case, I'm billing him. He's getting the CPE. Alexa, stop. So things like that. I have a house full of Alexa devices. Stop. And it's not just for fun anymore. You know, Angela, who is of all people, you know, she doesn't like change. She likes technology and she's cool with it all and she rolls with it. But I'm not gonna kid you guys. She gets frustrated when this thing doesn't work. Well, once we introduced her to the grocery list, and you could literally from the fridge yell the grocery list out and it gets added and it's 99.9% perfect. And then it gets put onto the list on your phone automatically, and you're in the store and it pops up and reminds you that you need, you know, celery for your meal tonight. I mean, it saved the day and saved so much time. Well, our entire house is controlled and our office is controlled by voice, almost 100%. The kids know how to do it. Every morning you hear them get up and tell, you know, either the Apple TV to turn on or the lights or turn off their fan or whatever. Well, there's a lot of great stuff out there and it's no longer just for fun and games. This is legit. This is really starting to happen, you know, and you can take advantage of these things and build them into your business to make it slicker, more fun, more interesting, but also just really to add some services and value and structure for your clients. Why Him, the movie, I don't know if you've seen it, with James Franco. They have Justine in the ceiling. She's like the Siri, right? The movie is just reeks of what could potentially happen and is happening as we speak. However, there's something fascinating. There's an Easter egg in that movie. Does anybody know what it is? It's all about high tech, advanced. It's from 2016. They're wearing Apple Watches. There's Justine in the ceiling. They mentioned Siri. And they land in a 727, which hasn't been on the runway in over 12 years. I don't know if they did that on purpose. I'll bet they did because Jonah Hill's involved. Don't miss this. It's going to be fun and interesting, and we'll show you some really cool gadgets that we've ordered just for it. And then we had to push this one back because of a complication. This is a WOWbinar that we're going to do on helping you create content for your website, just like we're doing right now. So we're going to show you how we do this from behind the scenes. Now, not necessarily the webinar itself. We've already done one of those, but we're going to show you how to take this and manipulate it into something that you can use either publicly or through a membership system and make some piece of content that has audio and video and bumpers, as we call them, you know, the intros and the outros. I'm begging my son, who's an amazing guitarist, he's at Berklee College of Music, to write me some bumpers, but cat's in the cradle. And for those of you that don't know now, Ignite Method has been moved to School of Bookkeeping. If you have a School of Bookkeeping membership, we will be doing our new Ignite Method monthly webinar workshops through School of Bookkeeping, and they are included with your membership. This has become a deal for our business, but it's just too much for us to do it all. So we're bringing it all under one roof. And, you know, it's funny, webinars came from Ignitization, which was a spinoff that we did. As we do these little test labs, and then we bring them in if they are worthy. So Ignite Method is now included. Look for the upcoming events that we'll be posting shortly. And the prior events are going to be added to our library on schoolofbookkeeping.com. Ladies and gentlemen, that was taxation benefits and differences for business entities and all that jazz with Brianna Beers of Lippa Beers and Associates PC. Brianna, before you go, I'll bet that everybody here would love to hear just a brief moment about how this all came about. How did you become the owner of a company that does a ton of revenue and really has a history, and you've hit a home run in your first year already?
Yeah. So I like this story. Well, you like this story, and I like this story. So when I sat down 4.5 years ago now, I sat down to interview with David Lippa, who was the owner of Lippa and Associates. And I asked him what the growth potential was in the business. And he said, in 5 years, you can be sitting in my desk. I quote that. In 5 years, you can be sitting in my desk. And I worked my butt off. Huh?
Katie, Tripty, you guys hear that? Hear that? Tom and Jay, you already know. Go ahead, sorry.
No, that's okay.
Right now, this is awesome.
So I would have celebrated my 4-year anniversary working for Lippa and Associates on July 17th. But instead, I bought the company on June 1st, and now I'm my own business owner. So I like the way that was a fun way to tell that. That's a good one.
So it was really cool because what he did is he got you through the first part of tax season, but then he stuck you with the extension clients.
Yes.
And you tackled it beautifully. We started working together, and we got things all kind of worked up and ready, and we kind of, pulled some triggers on things, and then it was like, oh my goodness, I have to focus. And you're great at focusing. You're really great at it. At the end of the day, now that you're done, you got through your first, rough period of it, got a few bucks in the bank, you're making your payments, everything's okay, you're adding people to your staff.
Yes.
Would you do it again?
Yes, absolutely.
No hesitation.
I think I've told you I've had a few times where things get hard and I'm like, I should have just started from the ground up, and there's no way, big picture, no way I'd be where I am now if I would have done that.
Good for you. So you got to take a risk. And, I think the key to what you said, the take home that everybody needs to make sure they take home with them today, It's not so much that you made it happen as it's more that you asked the question day one. You set the bar, you set the stage, you put a goal, and you gave a guy who would eventually want an exit strategy anyhow, an opportunity to train you, and then of course you have to deliver. And he, of course, made it happen because he wants to exit the business, take some cash, and go live his life under a tree in Cabo.
Living the dream is what he's doing right now. Every time I talk to him, he's living the dream.
He's a sailor, right?
Yes.
Yeah, he's at a Jimmy Buffett concert right now.
Maybe.
All right. Hey, folks, we really appreciate you being here. Not a single person dropped off. In fact, one person disconnected and reconnected, which means it was a hiccup. That means they were fiercely trying to get back to you. This is recorded. We will produce it and publish it so you can watch it again. There's a lot of good stuff in here. Make sure you watch part 1 also. We'll link them so you can see it. And we look forward, and I'm not sure what's going to happen. It might be Wednesday, it might be Friday. We're going to make some changes. Plus,
I like Friday.
Method workshops. Who, raise your hand. Raise your hands for Wednesday. Okay, put them down. Raise your hands for Friday. Oh, hands up. Not hands down. Hands down, hands up. Absolutely, almost everybody said Friday. Okay. Webinar Wednesday is dead to me. We are now WOWbinar Fridays. Okay, we'll make that happen. Awesome. Hey guys, Jay, Tom, our guests, Brianna, we're gonna let them know more about your partner program.
Yeah.
Super cool. Thank you for being here. I'll see you soon. Bye, everyone.